Has the recent report on existing home sales provided a blueprint for the housing market in 2024? I believe it has, and the current state of the housing market closely mirrors what we observed toward the end of 2022. This time, however, the cycle of interest rate hikes by the Federal Reserve has concluded, eliminating concerns about Federal Reserve leaders voicing their struggles with 6% mortgage rates on CNBC in 2024. Let's examine this blueprint in detail. According to the National Association of Realtors, NAR, the total sales of existing homes, encompassing single-family homes, townhomes, condominiums, and co-ops, experienced a slight uptick of 0.8% from October, reaching a seasonally adjusted annual rate of 3.82 million in November. When compared year over year, there was a decline of 7.3% from the 412 million recorded in November of the previous year. If you're finding this analysis insightful, don't forget to subscribe to the channel for more updates like this. Stay informed and ahead of the curve in the real estate market. Is this situation mirroring last year? To some extent, yes. In 2022, we witnessed the largest single-year decline in home sales ever recorded. Sales then stabilized around the 4 million mark, a pivotal figure I've discussed extensively. In 2023, there was an initial surge in sales. But as mortgage rates climbed from 6% to 8%, the trend shifted downwards throughout the year. With mortgage rates now reduced by nearly 1.5%, we've hit a significant low in existing home sales, setting a foundation for future growth. Recent trends in purchase application data over the past 6 weeks have shown promising signs, especially if this upward trajectory continues into the spring season. Our weekly tracker article was created to offer guidance, countering the widespread anticipation of a major price drop in 2023, which many believed would follow the sales decline. While there's some truth to the idea that prices track sales volumes, the anticipated drastic price fall in 2023 following 2022's sales slump didn't materialize. I delve into this more in my interview, explaining why I think the housing market dynamics shifted on November 9, 2022. Late in 2022, the dip in mortgage rates led to optimistic projections, but many were taken by surprise as this trend extended well into 2023. Let's avoid repeating this oversight in 2024. Let's delve into some additional essential data points. In November, first-time buyers contributed to 31% of sales, while individual investors accounted for 18% of home purchases. All cash transactions made up 27% of all sales, and distressed sales were 1% of the total. Properties typically stay on the market for 25 days. The duration homes spend on the market is a vital metric for me. I always watch for this figure to avoid extremes, either too low, indicating a shortage of homes, or a rampant credit-fueled sales frenzy, which often leads to a market crash. Over the past 2 years, we haven't seen explosive sales. The market has been more about limited supply and high demand. Yet the fact that this figure is above 19 days is positive. Ideally, a range of 30-45 days is healthier. This indicator is highly seasonal, often increasing in the latter half of the year. I'm looking forward to seeing a steady period of around 30 days on the market before the spring selling season kicks in. The median price for all types of existing homes in November was $387,600, showing a 4.0% increase from November 2022, $372,700. Price rises were noted across all 4 U.S. regions. The median sales price is, of course, subject to seasonal fluctuations. We see stronger data early in the year and softer figures later on, but prices remained relatively stable even with the 8% mortgage rates. As consistently observed in our weekly tracker data, the year-over-year price reduction percentage consistently stayed 4% below 2022 levels, even as mortgage rates climbed. This indicated a lack of distressed sellers in the market in 2023. Total housing inventory at the end of November stood at 1.13 million units, a slight 1.7% drop from October, but an increase of 0.9% from the previous year, 1.12 million. The unsold inventory is currently at a 3.5-month supply at the current sales pace, down from 3.6 months in October, but up from 3.3 months in November 2022. To those comparing this to the 2008 housing crisis, remember, in 2007, there were 4 million active listings and the monthly supply in 2008 was 10.8 months. In 2011, the market duration was 105 days, with a significant distressed supply and a recession causing job losses. In contrast, today's total active listings are around 130,000 with a monthly supply of 3.5 months, and the market duration is 25 days. Understanding these numbers is crucial. The latest report on existing home sales surpassed expectations and aligns with my analysis. The recent growth in purchase application data observed over the past 6 weeks likely hasn't fully impacted this report yet, as it generally takes 30-90 days for purchase applications to reflect in sales data. So as we approach 2024, we should analyze the housing market with the same scrutiny as we did on November 9, 2022. Market dynamics have shifted, and we'll continue to follow the weekly housing data closely, ready to adjust our outlook if negative trends emerge. As we wrap up our exploration of the current trends and data in the housing market, it's clear that understanding these dynamics is crucial for anyone involved in real estate, whether you're buying, selling, or simply keeping an eye on the market. The landscape of home sales and prices is ever evolving, and staying informed is key to making wise decisions. For those of you who are keen to dive deeper and explore what the future holds, there's more to uncover. If you're intrigued by what 2024 might bring to the real estate market and want to get a comprehensive view of the upcoming trends and predictions, there's a wealth of information waiting for you. Just click on the video appearing on your screen now, titled 2024 Housing Market Predictions. This video is designed to give you a thorough understanding of potential market shifts, emerging trends, and valuable insights that could impact your real estate decisions in the coming year. Thank you for joining me today, and I hope to see you in the next video for more insightful real estate discussions.